What is happening, best ever community? This is Matt Faircloth, and I am your brand new host for the best ever CRE show. Now, you guys did not tune to the wrong podcast. You are not on the wrong channel. You are on the correct channel. This is the best ever CRE show, and I am your brand new host of the best ever CRE show that will be bringing out episodes to you guys every Friday. And how lucky am I to be here with you guys, to be talking real estate shop with you guys on a weekly basis. I cannot tell you how grateful I am. So stay tuned, buckle in, put your podcast seatbelt on, because we're going to be doing some phenomenal conversations every week here on the show when I am the host. If you guys are watching the video of this program, you'll see Luke sitting there not in a branded shirt for his company, owning who he is and wearing a KISS shirt. I love that about you and that. So Luke, welcome to the show, man. I want to just kick it off with a question, right? Because some people might be listening to this show and be like, man, short-term rentals. This is a commercial show. Why are these guys over here talking about short-term rentals? And I know you own multifamily. You're not just an STR guy, right? But you are involved in other levels of the real estate business. But let's unpack STR for a second here, right? When people think about STR, they think about their next door neighbor that owns a shore house and rents it out sometimes and call that STR, right? They think about people that, I want to go to the mountains and I want to go to the Smokies or whatever. And I want to go to someplace I'd like to go vacation myself. And so I'll go and buy a short-term rental and rent it out enough to cover the overhead or make a little bit of cash flow on it so that I can have it as a lifestyle investment, right? What do you say to that versus the business side of STR? We can unpack the business side of STR in a second here, but why is that the majority of a lot of STR owners?
No, you're exactly right. It's not wrong to say those comments. And
Yeah.
I think the reason, to just boil it down in a very quick answer, is that it's a single family home. It is a single family home, Yeah. It's 1 to 4 family. Commercial doesn't really it's not involved in 1 to 4 family property. So it's difficult to scale in the sense that you're bringing in other people. It's almost impossible to syndicate. There are people that do syndicate it, but it is a whole different animal than what you're used to in the commercial space, because it is, again, a single family home. The home will not increase in value based on how much money it's making. So therefore it's not commercial, right? So in commercial real estate, you want to raise the rents, get the cap rate better so that you can sell it for more profit. And you can't really do that in the short-term world. There's a little bit of a gray area there. If you're in a super heavy, we call it a mega market, where all there is vacation rentals in that town.
Yeah.
Then sometimes the rental income may play a little bit of a part in the value of the home, but at the end of the day, it's appraised on residential appraisal, and it's worth what the neighbors sold versus what yours sold versus square footage, et cetera. So it is definitely not, in my opinion, commercial real estate.
That is interesting. And it's funny. We're doing interviews with people. They always give you an answer you're not expecting and all that. So that's it. Just to unpack that a little bit, that's not the answer I thought you were going to give, but I love it. And I think you nailed it in that, saying it backwards, that you can't value add the value of your property. If I buy an STR for $300K, it's going to be worth $350 only because the neighbor's house sold for $350, right? And I could make my house crush revenue and push rents up, push my bookings up and everything like that, drop expenses, make the property produce a lot of cash flow. That's great. If I do that on an apartment building, I've now effectively doubled or whatever the value of the apartment building, but that does not apply to an STR. So that's interesting, that maybe what makes an STR at a broad brush scope for most people not a commercial investment is because I can't affect the value of the property with a business plan. Right?
Yes, you can. You only in the sense that you can rehab it, and same thing with any single family home. If you buy a one that's kind of junky and force some appreciation due to the rehab, that's pretty much the extent of what you can do as far as, again, the banks are concerned, and that's who is the biggest player and whether it's going to make money or not. I got to get that money from somewhere. And also, if you're going to bring out, like I said, outside investors. Now, there are a few groups that will, syndicate single family home vacation homes. It's not something that I would personally be interested in doing. But honestly, the Jersey Shore guy, that's the avatar. That's the way to do it right.
Yeah.
You can go big, though. That's cool. One benefit of the single family home is that you can get a fantastic loan, in a lot of cases, even 15%, sometimes even 10% down. So just a regular person, or maybe not a regular person, but like a doctor that's looking to do the tax benefits. But
yeah, because
really
regular people don't have a couple hundred G's laying around, right? But a doctor with a couple $100 grand laying around to lay that 10% down can go buy himself a 10% down without having to syndicate it, right? But you're right. They could get themselves a shore house and not have to bear the brunt of all that debt service and carrying themselves. So maybe that's the right way to do it. That said, there are people that we've all met, you and I met at conferences, or that maybe best ever listeners that you've met in your worlds, that have either tried to or are in the STR world. But there are very few that I've met that own more than a handful of these things, because guess what? They're a handful, that you own like 2 or 3 of them, and you can actually make good cash flow on two or three of them. But Luke, why do you believe that even those that have tried to make this thing a business really end up only with a handful of them?
Again, it's not possible to scale. You're going to run out of money. If you're going to go out and buy a bunch of vacation houses for $1 million, you're going to run out of money. And that's where commercial real estate comes in handy, because then you can just go get other people's money. You can't really do that so much with single family. So eventually, if you're really shot out of a cannon and you're trying to grow and scale and be Matt, then you're going to move on. You're going to move
Careful
on.
what you wish for.
Yeah.
Careful what you wish for, guys.
You're probably going to move on to commercial real estate. But again, that's where short-term shines. Really, there's like a threshold there of like 8, maybe 10 really kick-ass vacation houses that's probably going to where you're going to live. The only other option, if you want to stay in this space, is you would become a property manager. So
right.
there is a huge demand for that. And if you do it that way, you're basically making the profits that somebody else, off of somebody else's house without having to buy the house. So if people stay in this space, they generally move into property management, which most people don't do that. They usually go on to commercial real estate. So vacation homes, the good news is again, you can get low percentage down. The debt on these things is fantastic because they're single family homes. They're fun. They're sexy. You can go stay in them with your family. They are a lot of fun, and also there's no leases, no evictions and all that stuff. So even for a noob or somebody with a heavy day job, there's a little bit less, stress there, because you don't have to worry about people trashing them. It's professionally cleaned 3 times a week, that kind of thing. So there's a lot of advantages for sure. But to your point, this is probably not a space you're going to stick with, and that's going to be your only thing for the rest of your life. I moved on to apartments.
Yeah, absolutely. But so the way that one could do it is if one wanted to scale into STR, right? Is just to unpack what you just said, is to do management, to make some cash flow managing other people's stuff. And, I get it. Maybe end up buying the stuff, buying their STRs from them when they want to tap out of the business, or you can make enough cash flow to make a living or something like that. Or you got to syndicate, which, as you said, that can be an albatross. As a syndicator myself, I could not imagine going to a group of investors and say, hey, y'all, guess what we're going to do? We're going to go out and buy, 50 of these houses. They're going to be all over the place. They're not going to be in one place. They're going to be all over the place. They're going to be in 15 different towns, because you wouldn't want to go buy 50 STRs all on the Jersey Shore or all in the Smokies or all, insert town here, right? Because I would want to be diversified, I would think, on geography. So if I was going to syndicate, I'd want it to be in a couple of different places. And I think that's a tough conversation with investors. You'd also have to have investors go in blind to say, I don't have all these 30 under contract right now, but I'm going to find them. I'm going to call up a broker like Luke or whatever, and he's going to help me, and just you wait, guys, we're going to find some good deals. So the investors would have to go in not knowing the specific asset or even the specific location or the specific cash flow they'd be receiving. Have you seen people be able to pull that off?
To bring in partners and
syndicating large scale STR.
Very few people. There's a few groups out there that do it. It's not something I'm personally that interested in. Again, I moved on to apartments, quote unquote. But again, the place where these things shine is that if you do it right, they're going to cash flow a little harder than a regular old long-term rental. A lot of cases, you're making money first year, and maybe even a decent amount of money first year. Now, of course, this is a weird economy we're living in right now. Everything's crazy right now. But so basically what I did was, in my early days, I fell into it because I was living close to the Smokies, and I actually own the 2 longest properties that have been on Airbnb the longest in the Smokies, which is the #1 vacation market in the world. So we've been doing this a long time. I've been on Airbnb since the day it became Airbnb, but of course we don't call them Airbnbs. They're vacation homes, and
Right.
there's 100 different ways to rent them. But anyway, so if you do it right, and you bring management in-house, you do want to bring management in-house on a vacation rental. You can make a decent amount of dough and kind of steamroll that into other assets, which is what I did.
Let's unpack that for a second. Why would an owner? Because I want to and I know you moved on to multifamily because it's hard, it's tough to scale. But by the way, you actually did scale, right? You and your team do own more than 2 or 3 STRs. If I dare say, roughly what range are we at right now for your STR holdings?
My STR holdings about $10 million, about 9 of them, because you got to understand they're about $1 million a piece in a lot of cases.
Yeah.
Right? So
yeah. That's significant, right?
Yeah. Some of them.
No, you look at that, you're like, man, how many apartment units could I own with that?
Exactly.
I get it. Right. And also not syndicated. That's all yours, right? So
right.
I get that too.
No outside partners at all, which is difficult to do that.
So let's unpack for those that want to add a bit of an STR to their portfolio. What you mentioned something. You mentioned that you got to manage in-house, right? Why? Why do you have to make? Because managing in-house on multifamily is something that doesn't even come into the conversation unless you're in the way up there on units under management. Why under STR does managing in-house become either a necessity or a possibility at lower scale?
It's actually, in most cases, fairly desirable. In the people that we deal with, there's usually a spouse that is maybe a house husband or a housewife of a wealthy earner, or maybe 2 wealthy earners with a daughter or somebody in the organization that can run it for them, and they enjoy it. They do. It's fun. You can post it on Instagram. You can go there and show the social media world how much fun you're having in your house and all that kind of stuff.
Yeah. It's all true on social media, right? Yeah.
Everything's real on social media. Yeah.
It sure is.
The short answer is property management in the short-term space is expensive. It's expensive. When I first started, it was an average of 35 to 40%. For third-party property management on a vacation.
How do you make money?
That has changed.
Yeah.
You don't make money.
Right. If they make money. Right. That's why you said earlier that you should get into management, because boy, that's a lot of money.
Now it has changed. It has changed. Mm-hmm. The management has gotten more, aggressive and there's more options available. And so now we're seeing an average of about 20%, but still that's a good 10% more than any kind of long-term rental situation or commercial situation. So to answer your question, you can't afford it unless you're, a lot of people buy these things just because, first of all, the tax advantages are fantastic. Of course, if you're a high earner, you want to buy a house on the beach, take your family, put it with a property manager, let it break even, you get the cost tag, no brainer. But again, to break even with a property manager is hard. You're going to have to pay attention. You're going to have to be on their rear end. They don't, a lot of these property managers don't even use Airbnb. They're trying to force people to come to their own website and do it the old school way. And we've seen a big shift, obviously, with COVID. This space became legitimate. Back when I first started with my wife and I, Avery, my wife is the undisputed, not even queen. She is the undisputed president of short-term rentals. She's the greatest of all time. She's got all the books and all the everything. Yeah. And so when we first started, we were literally shouting from the rooftops, hey, this is real. You can go to Destin, Florida. You can go to Myrtle Beach. You can buy a vacation home, and you can make money with it if you're willing to do it yourself. And it doesn't really require that much attention other than, cleaning up some puke occasionally, which you got to do that in an apartment anyway. So back then we were like literally trying to tell people this was a real thing. And then COVID happened, and all of a sudden everybody wanted one. It was like motorhomes and vacation houses. Everybody wanted one, And, so now we're
jet skis.
Jet skis.
Yeah. We bought the price of a jet ski tripled during COVID, but
Exactly. Yeah, man. So, but that's how I did it. I started throwing fuel on the fire, get as many of these things as I could going, and we bootstrapped the whole thing, and every dollar that we made would go into the next one, and eventually you get the fire built high and hot, that you end up buying, more and more units, and now I've got 50-something million in my portfolio, and it's been just an absolutely crazy journey. But I do have to credit the short terms for getting me where I started, that's where I started.
Yeah.